Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 22nd, 2022. Let's take a look at divergence. I love it when I see divergence between the fundamentals and technical analysis. Today let's take a look at stocks which are fundamentally very strong. Analysts are saying strong buy or buy, but technicals are weak. Technically it's a sell or a strong sell. So those divergences will make us money. So we got to look at strong companies which are diverging here. Technical says it's a good time to slowly enter and buy, and fundamental says it's a great fundamentally. So with that, let's take a look at few names here which are diverging between fundamentals and technicals. So one of them is Amazon.com. Everybody knows this company. They got great Amazon Web Services and great retail footprint on web. So with that, it also doing very well. There's some issue around the unions, so stock is tanking off late. Let's look at few of these names and see what's worth buying here. All right, so let's jump in here and look at stocks which are from a volume perspective more than 1 million shares traded. These are liquid stocks. And from a fundamental perspective, analysts are saying a strong buy. Look, it's a strong buy from an analyst perspective. Fundamentally, these are great. And from a technical analysis perspective, these are strong sell. So things like moving averages and DMI, divergence, and all these indicators, technical indicators, are saying strong sell. And then we got here fundamental from an analyst perspective and net margin perspective, it's a buy, but technical perspective like moving averages, oscillators, Bollinger Bands, they're all saying screaming sell. That's when you got to look at this divergence and buy some great stocks which are currently short-term bearish but fundamentally strong. So with that, let's jump in. All right, now let's from a market update perspective look. The fear and greed index is pointing to neutral right now. So I can see us going from neutral to fear zone pretty quickly, especially because Fed is not our friend anymore. They want to raise by 50 basis points, and they will also use some harsh language to tame the inflation. That's why I can see us coming down to say around 25 or so in a month or so. But things might change if Fed uses a little bit lighter language. But I can expect us to be in this roller coaster ride for some more time to come. All right, now let's jump in here and look at the market update. From a market update perspective, look, our Fed Chairman Powell says taming inflation is absolutely essential. 50 basis point possible in May. So he's basically setting a stage for a 50 basis point hike. So that can cause a little bit havoc in the Wall Street. So we will keep a watch on that. So stock futures are down with it's trying to attempt to avoid another losing week, but looks like that may not be possible. We'll see how it goes. And then you got Snap here, Snapchat, stock raises despite of revenue shortfall. I think this company might do very well. After Facebook is going through a lot of bad press here, Snap can be a comeback kid here. So I'm slowly buying some Snap in this sell-off here, holding it for a long time. And then you got Gap here, stock tanks big time, as you can see here, following a larger than expected sales decline and departure of old Navy CEO. I have seen Gap, many years. It tanks big time, like 12%, even 20% at times. And if you hold it for maybe 6 months to 1 year, normally they come back. So that's why Gap is a good one to slowly buy. Fundamentally not great company, but they do give good bounce at times. I've seen it many times. So with that, look, market is a brutal here. Look at the sell-off in Dow Jones. It's one-day chart here, huge sell-off. Nasdaq, huge sell-off. S&P 500, huge sell-off here. Look, Nasdaq is more severe, as you can see here. And futures are pointing to a down day, as you can see here. Dow Jones down 100 points in the futures market. S&P 500 down again. Nasdaq went higher after this brutal sell-off. It's pointing to slightly higher opening here. Oil down, and even a 10-year is down. 10-year interest rate down can help the stock market slightly. We'll see how it goes. All right, now let's look at the divergence. So here what we're doing is we are looking at the divergence between the fundamentals. We want fundamentals to be strong, very strong, in this case strong buy, and technical says strong sell. That's what we're looking for here. Look, we got names here. We got Facebook, which is Meta, and PayPal, and so on and so forth. I sorted this by volume, highest volume stocks on top here. Facebook is doing very good volume, and keep watching Facebook here. Facebook, look, from an analyst perspective, we got EPS growth for this year, next year, and revenue growth also this year, next year, all pointing nicely here higher, and we got overall score 81. But fundamentally it's a strong one. Look at the margin, gross margin, net margin, sales growth, all doing nicely. And look technically what's going on here. We got 1 day, 5 day, 10 day, 1 month, 6 month, 1 year, all down. That's why if you look at the technical perspective, it's a strong sell. But if you look at the fundamental perspective, it's a strong buy from an analyst perspective. And from a VWAP perspective, looks like it's pointing to slightly higher than the current price. Current price 188, VWAP tells you 192, and VWAP 20-day is 217. So stock is showing some upward momentum from a VWAP perspective, volume weighted average perspective. And next earning is coming up around the corner, 427. So this is why it's got a nice overall growth also. That's why stocks like this one, I keep a close watch because they can do very well. And we got a few more here. PayPal, I would let it come down a little more. Let's see some indication that it will go higher. It's been a free fall, as you can see here, big time free fall. And then you got a few more here. I love Amazon.com at these levels here. It's a great stock. Andy Jassy is the CEO. Looks like they got slightly negative free cash flow here, as you can see. But this company has got a lot of money. Look, they got a lot of money on their balance sheet here. $96 billion of cash on balance sheet. No need to worry about Amazon.com here. And then you got a few more here. I love Adobe, Shantanu Narayanan. This stock is coming down big time here. I'm keeping a close watch on this and buying very slowly and adding to my position. Look, technically sold off here in 1 day, 5 day, 10 day. Technical rating is sell from a oscillator and moving average perspective, but fundamentally good one here. Look at the analyst rating, nice rating for EPS growth for next year and revenue growth also for next year. This year it's got a little bit negative, as you can see here. It's a great one. They got $6 billion of cash in the balance sheet. And we got a few more, as you can see here. We got little company in mode here, Israel-based medical device company. Look, same story here also. Fundamentally good, nice revenue growth, as you can see here. And technically, this stock has been selling off for a while now. I would say, if you want to buy very slowly. Don't buy huge quantities. This will also this will also go higher as market stabilizes. And we got some quality stocks here like Generac, SPGI. Both are great stocks fundamentally. Look at the overall score, nice and high, but sold off in the near term. This is also a good one. Divergence between the fundamentals and technicals. And then you got a few great stocks. I love Google and Intuit both. Even ServiceNow works. All these stocks have got good fundamentals. Technically, they are sell right now. And look at the net margin. All these companies are net margin positive companies. They make money. They are profitable companies. So with that, it always pays to look at these divergences and go after the strong candidates. Especially, I love the ones with nice overall score here. They can do very well, and as market stabilizes, these can zoom higher. That's why mantra here is buy slowly, go after quality names. You will have a nice pleasant surprise. If you have some patience, wait for 6 months to 1 year, these can bounce back pretty hard. All right, so list continues here. We got a few more with the analysts saying strong buy and technical saying strong sell. Look, we got ABCL, APP, which is App Loving, and IBKR, Interactive Brokers, and so on and so forth. So keep watching here. We got a nice overall score in ABCL here. ABCL looks like revenue growth 1 year is negative here, but overall score is nice. And this one probably I would avoid here, even though analysts are saying strong buy. Look, from a revenue growth perspective, they got negative revenue growth for out years, and even negative EPS growth. But we got other names like App Loving here. That's a good one here. Nice overall fundamentals here, and technical says sell here. You could look at such names here. And we got Walgreen and BAM. For folks who want to look at dividend, BAM could be a good one here. It's also a good one. And SNBY, it's a signature bank. It's also a good bank here. Look, it's got a pretty okay rating, not too bad here. You could look at this one also. They've been doing very well. You could take a look at that one also. Technically, it's a little weak, as you can see here, but fundamentally it's a good one here. They got nice 46% net margin. That's a very good net margin. And we got WAL. Looks like it also has a nice net margin. Good one here. All right, now let's look at a few more here. Now what we're looking at is we're looking at fundamentals saying buy. So this is where analysts are saying buy. It's not strong buy like previous list here, but it's a buy. And technicals are saying sell. Previously we looked at strong sell. Now we are looking at sell. So that's the divergence here. Fundamental says buy, technical says sell. Look, we got the list here all the way from Netflix to NYCB. And you got to take a look at these names here. Netflix, as you can see here, they got a very bad earnings report where subscriber growth came down. That's why stock is in a free fall mode. I would not catch a falling knife here. I would wait for this to settle down and then buy. I know Reed Hastings can really try to turn the market around, but what's going on is HBO Max is gaining some momentum here, and Netflix is really struggling. They will crack down on the password sharing, so let's see how it goes, but wait for some more time, let it stabilize, then you can slowly jump in here. And we got Ford here. I love Ford at these levels here. It's a great one. The CEO will turn this company around and electrify the company. Short-term look, it's all negative here, but analysts are predicting a good EPS growth and revenue growth for next quarter and next year. Nice overall score. And then you got a few more here. We got Freeport-McMoRan here. It's a gold and copper company, as many of you know here. Same story. Stock has been struggling near term, but long term, nice revenue growth. This one you got to be a little bit careful here. A few folks have got burnt in the past. This typically it's a cyclical type name here. When everything goes well, gold goes well, and copper goes well, this will party like it's done in the past. But when the market cools off in the commodities, this will also cool off. It's a direct correlation to commodities, as many of you know here. And then you got Intel. Intel is a comeback kid. Stock has been taking really down brutally here. It's trying to compete effectively with its bigger companies like AMD and NVIDIA and so on and so forth here. I think it's a good one here. It can turn around. Look, right now it's a little bit weak technically, but fundamentally it's good. Nice projection from analysts for the next year from a revenue and EPS growth perspective. And the list goes on. Look, we got some small value stocks here like Kinross Gold. It's a good company here. You could take a look at that one also. This also can do well. And list continues. We got Wells Fargo here. It's also a good one here. Cisco, again a good one fundamentally. You could look at such names here and buy them slowly. And we got Disney here. Disney is a comeback kid. You could buy some Disney also. This stock got clobbered after Netflix fell down. And they're also having some issue in Florida around losing some of their privileges as a Disney city. And list continues. You got a few more great ones here. Look, I love Square also. You could look at this Square or a block, as we call it. It also has a nice rating. You could look at that one too. Chevron is a great one. You could buy this one also. And list goes on here. Let's look at a few more names as we go forward. All right, so the list continues, as you can see here. Same theme here. Nice net margin. These are net margin positive companies. Analysts are saying buy. and technicals are saying sell. This is when you have to take a look at these and buy them slowly. And look, we got a list here, and we got stocks like UUU. It's a uranium stock, as many of you know here. Look, it's nice from a future EPS growth and revenue growth perspective. Getting sold off here near term. Sky high valuation from a price to sales ratio perspective. Look, it's 100 plus, and this is where you could slowly buy. There is a high valuation. It's a little pricey, but at these levels you could slowly buy. And you got a few of my favorite stocks like Texas Instruments. It's a sleep at home stock, very steady Eddie. This stock has been there forever. You could take a look at that one also, and few more. We got Zoom Video, and we got few more stocks here. Great ones. I would like you to take a look at these names here. Buy slowly. Look, we got one of my favorite energy name here, EOG Energy. I love this one. This stock has been doing very well. And we got few more with nice overall score here. CF Industries. Look, it's got 100 out of 100 overall score here. That's also a good one here. As usual, keep watching the overall score. Higher the better. All these names are diverging between the fundamentals and technicals. It's a good one to take a look here. And we got a home builder here. Home builders are coming down big time, as many of you know here. As the rates increase, mortgage rates increase, and there is not so much demand for the homes. That's why home builders are falling down. KB is a good one here, but you got to slowly buy. Look, it's trying to improve in 5-day and 10-day. You can slowly accumulate a nice position in great home builders like KB Home. All right, let's jump in here and look at one or two stocks in little more detail. First, we'll take a look at Amazon.com. Everybody knows Amazon. They got a stunning web services business, and they're doing great in that. And they're also going into multiple areas and trying to reinvent the company. Every day is a day zero in Amazon.com, and they're not going to rest on their laurels. So with that, let's jump into this company. Look, Amazon.com, from a stock chart perspective, they've done great during stay-at-home time when there is COVID. But in 2020 here, look, 2020, it's been sideways a little bit. Look, trading a little bit sideways, as you can see here, but generally 2020 was a good one here. It's went higher. 2021 came along right here, as you can see here. Stock went higher slightly, but now in 2022 here, stock is coming down. Look, 2022 comes along. Stock is really trying to see where to go, as you can see here. So this is when we come in here and see what we can do. And from a support level perspective, you can see some good support levels somewhere here. So around 2800. But at these levels, you could slowly buy this company here. And what we look for the company, as usual, we want earnings to grow. Look, Amazon gives it to you, nice EPS growth. And we want sales to grow. Look, Amazon gives that also to you, nice sales growth. And shares outstanding, we want it to be constant or going lower. Amazon, I think its sales outstanding is pretty constant here. Now they're not diluting the share count. That's also good here. Thumbs up from a top line perspective, this company doing it. And from a bottom line perspective, look, net margin is improving. I love it when the net margin goes higher. Operating margin also increases nicely. Look here, operating margin is going higher. That's also good. Company is taking care of its bottom line. And they're also reducing their debt. So look, debt load is coming down off late here. That's also good here. So I say thumbs up to Amazon.com. These guys are doing it. Fundamentally strong company. Analysts are saying a strong buy, but technically it's a sell. So I say, go buy some Amazon. Don't worry. Buy slowly and accumulate. And let's look at Amazon, a quick snapshot here. Look, Amazon right now, stock price is around 2,965 here, and huge $1 trillion market cap. Looks like it's went beyond the sell size here, but huge $1 trillion plus market cap. Nice respectable volume. It's a strong buy from analyst perspective. And look, its stock has been selling off in near term. Look, for 1 year it's down 11%, all the way from 1 day to 1 year it's down. But as you look through here, 2 year, 5 year, 10 year, this company has done great. Nice sales, $469 billion sales, and nice sales growth for this year, as well as nice EPS growth for this year, next year. So they're doing very well. From a future perspective, it's great. Look, from a technical rating perspective, it's a strong sell rating. That's why there's a big divergence, strong buy from analysts, strong sell from technicals. And look, from a moving average perspective, stock has been down from 5-day, 10-day, 50-day, all the way to 200-day moving average. That's when we can slowly take a look at this company and buy. From a technical perspective, it's a very, very, very bearish, fundamentally strong buy here. And as you can see here, look, overall score is great, healthy, 72. I think it's a slowly good one to buy and accumulate at these levels here. All right, its earning is coming up, as you can see here, 428 around the corner. That's one of the reason stock is it's a little bit volatile around the earnings, but it's a good one to buy here. All right, now what we'll do is we'll look at one more company here. It's a Zoom Info. So if you're a seller, sales exec, you want to look at who is the decision maker. Zoom Info will give you the directory where you want to sell your product or services to, and you can see who is the decision maker. So Zoom Info is very good. All the sales people, they're buying its software. That's why this is growing nicely. And it's trusted by 27,000 plus businesses. And look, Google, Zoom, Snowflake, all these companies use Zoom Info. So with that, let's jump into this great company. So look, Zoom Info from a stock perspective, stock has done great back in 2020 and 2021. Look, nice uptrend here. And look, 2022 came along, and even before that, back in 2021 here, around October, November timeframe, stock tanked. Look, stock is down big time. Now it's trying to go higher. So they got a nice base here. I think around this year could be around 45, could be a good base. I say it's even good. You can look at one more support level around 50. That's also a good one here. So at these levels, you could slowly start buying here. Zoom Info, look, from a EPS perspective, from an earnings per share perspective, they are positive earnings per share. Company turned the corner. They're making money. Sales, great sales here, nice clip, I love it. Shares outstanding, they're reducing the shares outstanding count. They're not diluting, it's slightly increased, but look, it's much below from the previous levels here. They're doing very well from a shares outstanding perspective. This from a top line perspective, I say it's a good one here. From a bottom line perspective, net margin increasing, that's great here. Operating margin increasing nicely, that's also great. They're tightening their belt and efficiently running the company from a margin perspective, and they're paying down the debt. That's what we want. So Zoom Info, I say go buy some Zoom Info. They're doing well. They're controlling their bottom line nicely and growing their top line nicely. That's the way to go. All right, now let's look at a quick snapshot of Zoom Info. Look, stock price is around 51 here, and the market cap is $23 billion. It's a large cap stock, and it's a strong buy from analysts. And look, strong sell from a technical perspective. And look, from a near-term perspective, stock got sold off. Look, 1 month, 10-day, 1 day, all down here. 6 month, year to date is down. And if you look at 1 year, they've done nicely here. They made money for investors. And as you see here, this is a young company. It's not there in a 2-year, 5-year time frame, but it's down 35% from 52-week high. And look, from a future perspective, company has nice expectation for the future growth here. Both EPS growth and revenue growth is good for next year. We got sales growth for this year, and sales growth here for next year. Both are good here. EPS growth is also good. And they have a lot of money here. Look, they got total cash of $327 million, not too bad. And debt to equity ratio is 0.70, below 1. That's also checks out here. And current ratio is more than 1. That's also good here. All right, from a technical perspective, stock got sold off here. It's below its 200-day moving average, as you can see here. Put call ratio is very high. That tells you folks are buying a lot of put options, hedging that can create stock to go, cause stock to go higher. And as you can scan through here, they got Insider selling, that's also taking some toll on the stock, as you can think of. Short ratio is 3%, not too bad. And look, overall score is 68, that's good. And Morningstar is saying B grade for growth and B grade for profitability, that's also great. Financially, it's a C grade. Piotrowski F score is 6, that's great here. Books are doing very well. So I say buy some Zoom info slowly and accumulate. So with that, thank you very much. Happy investing and trading. Please subscribe.